Bitcoin briefly pops above 60K on Fed rate cut hopes, but sellers return. Front-end vols get hit as the election debate proves to be a non-event, taking realized vol back into the 40s. And long-dated vols and call skew start to crack under the weight of a market with no bullish momentum or imminent catalysts. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight, and I've got my man Dave in the studio from FRNT. How you doing, man?
Yeah, I'm good. Yeah, excited this week.
Yeah?
Big week, Fed week.
It is. It's the one we've all been waiting for.
Yeah.
But the election debate last week was a bit of a non-event, wasn't it?
Yeah.
We thought that was going to create some madness in crypto, but it was all pretty contained.
It's contained. Like, we're still in this horrible range at the moment, which is a bit frustrating. Kamala, if you look at prediction markets, won the debate, and we're back to 50-50. So, like, I actually, we spoke about the asymmetry actually in terms of, like, Kamala wins is kind of status quo. Trump wins, obviously, you kind of feel like this probably, you know, it's more positive. So we're now back in this 50-50 in terms of coin flip on who's going to win the election. So yeah, markets can't really do a lot with that, and so we're kind of in status quo. If I think if Trump had cleared it, you know, like he did with Biden, and we actually saw everything pump, you know, then if he was clearly kind of winning the race, then
he was too busy talking about people eating cats and dogs.
And yeah, I didn't even watch it. I was like, I thought I might be.
Well, you don't need to watch it all these days. You get the highlights, don't you?
Yeah. And you kind of feel like it makes you a little bit more stupid the more you listen to these people. But, yeah, look, unfortunately, the election, I think, is going to keep this uncertainty over us. There's no clear path on that. Although we spoke about the Nate Silver stuff, he has Trump well ahead in terms of winning the Electoral College. But
but this week, it's all about the Fed.
It's all about the Fed.
And the Fed has become a reason, like, the way it's moved is pretty impressive, right, since last week.
Yeah, well, we had that what we call Nicky Leaks, right? The Wall Street Journal guy who everyone says the Fed whisperer, and it did feel like a trial balloon that had been placed there to let the market know in that
like what you're doing, pricing out all period. Chance of a 50.
Yeah, right? Like to kind of put it back on the table, and I think they'll go for 50. We discussed this before we come on here. I think there feels like given the data flow, I think they feel like they should have gone 25 in July. There's no meeting in what we now say October. So there's quite a gap. And then actually the next Fed meeting is right banging as the
day after the election.
So maybe there's some complications around that. So I think the Fed, look, we've seen the inflation data. The disinflation is in train. Fed are really comfortable that side of things is done. In fact, quite interesting, if you look at break-evens now, so this is like the market's pricing of where they think inflation will be. Like 5-year break-even rates now in the market are about 1.8%. So the market thinks inflation over the next 5 years is going to average sub 2%. And the Fed will be looking at those things as well, and they'll have comfort that, look, you know. So
basically real rates are just way too high.
Real rates are way too high.
It's like a tongue twister.
Yeah. They're too high. Their concern now is on the labour market, which is clearly showing softness. It's not like, you know, falling off a cliff yet, but there's clear softness. There's clear, you know, given that's where their focus is, I think they'll go, do you know what, let's take an insurance 50.
But let's say they go 50, and then in the presser, everyone says to Powell, that's an emergency cut you just did. Like, what's wrong? Is the economy falling apart? Like, how's he gonna thread that needle of kind of justifying the 50 without making everyone panic and be like, oh, okay, the economy's in the shitter now? So
I don't think it'll be deemed as an emergency cut, given that it's actually now going into this. That's what, you know, we priced.
It's the expected cut now, right?
I think we're at what, 60% odds
70
now.
Yeah, so it keeps grinding higher.
Yeah, so actually it'll be in line with what the market's expecting. I think you say he can sell it on, look, inflation keeps coming lower. with every time inflation comes lower and all the monthly readings, like headline
It's
inflation,
effectively like we're hiking rates, isn't it?
yeah, it's like rates are getting tighter and tighter. So real rates have gotten tighter since he spoke last month.
Sure.
So I think he can justify it on that, like with the,
you know, so you could kind of say we purposely held rates too restrictive for too long to make sure we'd beaten inflation.
Yeah.
Now we're confident that we have.
Yeah.
So there's not a reason to be so restrictive now.
Yeah, and you could kind of argue that if they cut, you know, if the market like was looking for 25 a month ago, just given where inflation's come down, 50 in a real rates sense.
But wasn't inflation a little bit higher than expected in CPI?
No, it came down. What headline come down from 2.9 to 2.5?
But that's the annual rate, right?
Yeah,
but like the shorter term stuff, wasn't there like a pop?
But there's a lot of noise in like the month to month data, right? But I think as far as the Fed are concerned, inflation's done. It's no longer a question. Okay. There's clearly a bit of slack now in the labour market. We talked about the jolts. Like if you look at vacancies to employment ratio, that's now at like 2018 type levels. So I think they're looking at.
So these are the things that are spooking them more.
Yeah, and again, just maybe there's some politics involved as well. So I think they realise real rates are very tight right now. Okay, they've got plenty of room. So let's just get a 50 underway, particularly given that they've not got another meeting for 2 months after.
So let's say I believe you then that they're gonna cut 50. Okay, yeah. What does stocks do and what does crypto do?
So stocks, I think, are gonna punch higher. Now, my reason for that, because I get a lot of pushback on this on Twitter and stuff. But in the first two things, right? Post 2008, we're a function of rates and liquidity, right? So all the comparisons that went before that are just wrong in my opinion, because in 2008 we artificially inflated assets, right, and pumped liquidity in because they were the collateral underpinning the financial system. Pre-08, we were far more a function of the real economy. So the reason markets sold off when they cut rates was because they were cutting rates because we were slowing down and the economy was slowing down, and stocks were more of a function of the real economy. Now they're not. Now we're a function of rates and liquidity. Hence in 2020, the world was shut down. The US experienced its biggest post-war recession, and we hit record highs in stocks because they were flooded. Because
liquidity was right? Abundant.
So there's that side of things, but also if you look historically, usually like the 50 bip cuts or what have you come, and if you look at like 2007 and stuff like that, they come when the market is very stressed, and they're reacting to a stressed market. Right now, there's no stress in the market, right? And this is why I say we're in this Goldilocks period, because we've got this disinflationary economy. We have a slowing but not collapsing economy, right? And a Fed with lots of firepower. So that's why I think them cutting 50 will be just seen as
okay. But the equity market has been rallying this week on that idea that 50 is happening. Okay, crypto's still getting sold. Yeah. What's this dichotomy? Why is crypto still getting sold?
Mate, it's a head scratcher at the moment because
is there just some big sell order at 60K?
I think there has to be. I think there's a flow out there. I can't. I'm struggling to square that circle on why Bitcoin's not pumping right now. Gold's doing what I thought it would do.
Yeah, very much so.
Gold's hitting record highs.
Yeah.
Everything right now, like the rates angle, look at 2-year yields breaking down in the US, the dollar's breaking down. Global liquidity, if as measured by M2, is really ramping. There's some nice charts out over the weekend, highlighted by a few people actually, showing that Bitcoin typically acts with like about I think it's like a 10-week, call it 3-month lag to global M2. That now says we should absolutely be sort of ramping. So I can only think there is a flow out there, and it does feel every time we get on that 60K handle, it just keeps getting sort of smacked back down.
Which makes, I'm obviously more of a short-term tactical trader, right? So for me, when I see price action like this, I'm like, okay, if they cut 50 tomorrow and the algos buy everything, you got to be selling into that in crypto. And I wouldn't necessarily fade it in stocks. Well, actually, I probably will fade it in stocks. But I'd be more confident fading it in crypto because we've got the evidence that every time we go up there, even if the macro is pretty strong and stocks are reacting well to it, crypto just keeps getting sold up there, right? And that's probably not a condition that is going to change until maybe after the election. Yeah,
I mean, it reminds me a bit, and we spoke about this, it reminds me a bit from my FX days when you'd kind of, all the fundamentals would line up for a currency pair to move in, you know, the direction you thought. And it just wasn't going that way, and it'd go the other way, and you couldn't really explain it. And then you'd find out a few weeks later that there was a big like M&A transaction going through, and it was just like someone had to buy or sell that currency that went against the view. And then all of a sudden you quickly re-rate back to probably where it should be.
Yes, there's a big catch up at some point.
I feel that's going to happen with Bitcoin. The problem is you just don't know like when that will be. As a very fundamental type guy, the fundamentals right now for Bitcoin just look like beautiful for us to sort of start making record highs. But to your point, the price action looks pretty shitty at the moment.
Yeah.
So my problem with that is, you know, how do you know when that you know, when that flow, if it is a flow,
how do you know when it's gone?
How do you know it's gone?
Well, the price action starts to improve, right? I guess.
Yeah, and maybe see it. But the other issue you got with Bitcoin is it's because of the volatility in it. The price action could like it could snap higher really quickly. So maybe that's where you just need.
Well,
to keep
Michael Saylor's been buying more. I don't know if you saw that headline. He bought another chunk.
Yeah.
But anyway, this week I got the chance to catch up with Marty, who's pretty big on. You know him, obviously.
Yeah, I know Marty.
I think you were maybe on the podcast with him back in the day, right?
Yeah.
But he was basically thinking vols. He was an influencer. But now he's sort of running some money for institutions over at MYMO Group. So he's a CIO over there. So yeah, check out don't forget to like and subscribe so I can get people like this to come on, because he's doing a great job over there, and he's been calling vol in crypto probably better than most of the vol traders I know out there, right? So have a look at what he had to say. Okay, everyone. So I've got a special guest this week, Marty, well known on crypto Twitter as CIO at MYMO Group. How are you, sir?
Hey, man. Thanks for having me on.
Pleasure having you on, mate. Now, obviously, I can't see your face, but you've got this funky avatar going on, which is looking very cool indeed. A bit of NFT action in there as well, right?
Yeah, it's a custom Anata NFT. So they custom made this one that tracks your eyes, you're blinking. You can, track your hands, all that stuff.
I'm going to have to get something like this made for me, I think. You know, people probably prefer to learn from me if I look like that.
Yeah. No, it's better for me for like a security risk, right? I live in Brazil, and I'm totally happy to meet clients and meet people, but when it comes to showing face online, it's better left alone.
Yeah, fair enough. Okay, so tell us a bit about your background then. So how did you get into crypto and trading in general?
Oh, sure. Yeah, I don't really have much of a traditional finance background, more of a self-taught trader. It started, my friends were buying fun stuff online, when Bitcoin was $30-40, and I had bought a whole one at $100, but at the time I'd probably had $100, so it wasn't like I had a bunch of money to throw into this Bitcoin thing at the time. I didn't know what it was for. I hadn't really read a bunch of books yet. I never really was educated on the matter, and I had bought one. So I wrote that first cycle for me was 100 to 1,000. So I was like, oh my God, I'm rich, right? I'm a kid. I had whatever, $1,000, right? And then the next cycle, I wrote it all the way back down to 100. I was like, oh fuck, next time I'm going to hold, I'm going to sell it, or, I'm going to accumulate some more and sell it. So the next cycle was that 2017 cycle, and Bitcoin went from whatever, 1,000 to 20,000. And I had gotten out around 16, 17, 18, something like near the top, not the Pico top, but close. Mm-hmm. And, a couple months later, it had gotten rinsed all the way. And over the time, I was mostly trading spot, but, at the time was BitMEX, and you were trading derivatives, and there was data futures and perps. So that was like my intro into the derivatives market. I had hired some more smarter people than me, and we started doing a bunch of market making on FTX. And that's kind of how like the crypto Twitter thing started. I needed, more like-minded people to talk to, and started going on Twitter and, posting P&Ls or posting leaderboard snapshots. And I think that's, where it kicked off the crypto Twitter thing for me. And G-Ball Greg actually interviewed me first, was my first interview or podcast. That was a year or two ago now. So after FTX, we went into options. Options is a new market in the crypto space, and it's definitely less competitive than the spot or the purse market in current fashion.
Yeah, I think I came across you on crypto Twitter because of G-Vol Greg as well. We were on a Twitter Spaces once having a chat about the vol market, and I was impressed. I didn't realize at the time that you were self-taught, and it's like the way you were approaching vol, the way you were trading crypto vol, felt more like a seasoned vol trader than say someone who'd been doing it like a year or whatever, right? So I think that's partly down to your approach. So why don't you give us a little bit more insight into what is your approach to trading volatility, taking risk? Like how do you think about it? Like, and how do you come up with your kind of ideas around the sort of positions you want to take?
Sure. Well, vol is meant to be sold. So we're always trying to sell vol. We're always trying to sell contracts.
Vol is meant to be sold. Is that just is that just the truth? Yeah.
Yeah, I need like a billboard, like printed on, a banner posted in the office. Vol is meant to be sold. Especially crypto vol, where we get these crazy, front end gets lifted 100, 150, 120 handle, and you're like, for what? Like Trump is on stage at a Bitcoin conference. Like this is, going back to 50 tomorrow, 40 handle tomorrow. On the institutional side, we mostly focus on corporate treasuries and doing kind of like call overriding or more simple structures. Depending on what the client needs, we'll either do it in USD value or generating more coin. Here in Brazil and South America, a lot of people are, in Argentina, the inflation is like insane, right? Like 100% a year. I was there last year and the coffee price changed every day, or sometimes 2 times a day, the coffee price was changing. So a lot of these protocols and DeFi projects or trading groups out of Latam are always looking to grow more Bitcoin, grow more ETH, mostly majors. So our bread and butter is this corporate treasury, but in terms of actively trading, it's usually crypto options arbitrage and a little bit of market making.
Okay, but generally coming from a short vol bias, basically, and taking advantage of those pops in vol.
Yeah, mostly.
Okay. And when you say arbitrage, what are you doing? Like, are you arbitraging across different trading venues, or are you looking at the vol surface and doing arbitrage there?
Arbitrage across different venues. So CeFi and DeFi, let's say there's 100 plus different venues to trade. They all have different pricing. They all have different collateral and margin requirements. They all are different, or different speeds. There's a lot of little tiny things to nitpick and exploit compared to, let's say, New York Stock Exchange, Apple options. Everybody's just trying to provide the best price, and the best price gets execution. Where here in crypto Wild West, there's 100 different prices on 100 different venues. It's just waiting for somebody to come pick it up.
Right. And then the liquid kind of out is basically on Deribit, because that's where you get the tightest markets and the most liquidity, right?
Yeah, Deribit is the truth of source in the crypto option space. If you look at 24-hour volumes, sometimes Deribit does 4 billion, and the next best competitor does 200, 300, 400 million. In the same 24-hour period. I'm not sure why it hasn't caught on, or other venues haven't. Their volumes have steadily been increasing, right? But not at the magnitude of Deribit. Like, I don't know, let's say Binance or Bybit. Definitely their volume has picked up, but nothing in compared to the size of Deribit. I'm not sure exactly why when they offer similar product offerings.
I mean, maybe there's some first mover advantage there, right? There's a critical mass of crypto native options users that are on there, and the platform's amazing to use, right? It's so user friendly. Like, since I've been using it, I've enjoyed being a PA options trader on there. So like, I compare it to the TradFi platforms out there, like Interactive Brokers and Thinkorswim and like who else out there. I think it's better than all of them, to be honest.
I agree. Yeah.
Right. So yeah, that I think that helps. We were definitely singing the praises of Deribit there. No bias whatsoever, clearly. Right? But all right, let's
Deribit mug.
Yeah, well, I should have worn I should have worn a Deribit hoodie today, right? But but what was I going to say? So what about? So obviously you're very much in the weeds on crypto vol, more so than even myself. What are you thinking of the vol setup right now in crypto options? Right, we're seeing a really weird shaped term structure that looks like a staircase in terms of this massive kink for the 8th of November. It's pricing in a forward vol premium of over 20 vols, which equates to maybe a 10, 12% move on the day of the election. But the front end keeps getting offered because people like you say vol is for selling, and we're stuck in a bit of a range in terms of spot. So where do you see the opportunity here? Because is the move already priced in, or is there a clear opportunity in your mind here?
Oh, November 8th is quote cheap, right? I write this newsletter every 2 weeks. So it's the past 2 newsletters. So let's say about a month. I've been saying November 8th is quote cheap, right? I never want to say like crypto vol is cheap to buy because it can just keep going lower and lower, just become bottomless at some point. But November 8th seems to be the day. November 8th is also not a normal expiry, right? Deribit had added November 8th first because it was a market that people wanted to trade, and then others fell in line. But November 8th isn't a normal, monthly contract. So November 8th is cheap. We're seeing, doesn't matter who wins, right? We'll probably see a vol build up into the event and then sell off after. I guess I wanted to pick your brain a little bit about what you think about the U.S. government and their Bitcoin holdings. Will they follow what Trump was saying, that they're going to accumulate Bitcoin? I'm in the camp that it doesn't matter. Like, they should just stop selling the seized Bitcoin, right? Why do you have to go out and buy it, right? And what difference does that make if the U.S. deficit is 30 trillion plus, right? Like, does it make that much of an impact?
My sense is that they're just saying what they need to say to get the crypto vote, right? To some extent, I don't know that they're actually going to implement any of this, like this Bitcoin strategic reserve that's going to be in the billions of dollars, hundreds of billions of dollars over like in 10 years in the future. It will be, who knows, right? But right now, it's just, what do I need to say to get the however many million crypto holders to vote for my party, basically, right? And I think Trump was the first to cotton on to that idea that you've got all these people, like apparently more people own crypto than own dogs in the US. And it's like, if I appeal to that, that's a large demographic that I can appeal to. And then the Democrats were really slow on that, basically, right? They were much more restrictive. And then they realized, oh shit, what we're doing. And they've been forced to turn a little bit more friendly, basically. So I agree with you. There's probably a run up. Depends how Trump's doing in the polls and stuff, but there's probably a run up into the spot and vol into the election. But, we've seen time and time again in crypto markets, this anticipation of upside into an event that is thought of as a major catalyst. And then every single time you get a sell the news event, basically, right? So isn't this just going to be another sell the news event in crypto?
Yeah. Build up into the event, front end gets mega lifted, and then, you go look out to June or whatever, it's probably still going to be 60. People are like, and who cares? And the event's over. You just want to, if you're a buyer,
not just the vol. I'm talking about spot sell the news as well. Isn't the spot going to do the same? It will run up into it and then get sold.
Like 70 back to 50.
Yeah, something like that. Who knows?
Just in the same range we're in, 70, 50, 70, 50.
Well, I'm kind of hoping we break the range, to be honest. Like I thought we could break to 72, go to 80, and then it's a big flop, right, from there.
Yeah.
but who knows?
New all-time high. I mean, this new all-time high was kind of boring, like, oh yeah, we had 70, woohoo, and then just right back down into range. We never really saw like that. I think even one of the ETF providers was on CNBC, like 80K in May, say it with me because it rhymes. And I was like, just sell it all right now. 80K in May, sell, say it because it rhymes. I'm like, oh no. This is not good. Yeah. It doesn't matter what the US does in terms of their whatever strategic Bitcoin holding. I think that they have a whole other issue on their hand of figuring out what a security and a commodity is, figuring out their tax guidance on crypto, making it more user-friendly, like the US being anti-innovation or anti-crypto, being anti-crypto is anti-innovation, and the US is built on innovation. So it seems like a weird position to me. And at the end, they want to control all the rails. I understand, right? They can't have these shitcoin, people getting rinsed on shitcoins every day. They can't have 100 different venues and markets. I get it, and I understand they want to control the rails, but you have to come out with some more clear-cut guidance to allow people to follow. And if they don't follow, then you can go after them. But just, going after everybody because you feel like it, or, they did something you didn't like doesn't make any sense.
Yeah, and that's true. I mean, Trump being the more business savvy candidate, I guess, right? Like he gets that there's an opportunity here to bring people in and do more business in America if we have a more friendly kind of regulation towards it, right? It is one part of the economy that's still growing massively, right? You're sucking talent out of all these different industries into crypto because it's a growth industry, unlike banking, for example, that's been on secular decline for so long, right?
Sure.
All right, so what about ETH then, right? Because ETH's just been in the doldrums for ages. Bitcoin dominance keeps creeping higher and higher and higher. Is this thing ever going to make a comeback? Because this week we saw a load more call spread buying. I don't know who's doing it, but there are December call spreads getting lifted constantly right now. I think it's like the 2,400, 3,000 call spread that's trading in December in ETH, right? Someone's bullish ETH. What about you?
Opium. Have you ever tried to long Bitcoin/ETH instead of ETH/Bitcoin? Pull up the chart. It's just up and to the right. I mean, Bitcoin is the king. It's here to stay. It was interesting. You didn't see like NFTs or shitcoins take off on ETH this time around, right? It was all on Solana mostly. I mean, this cycle ETH seems a little dead. I know a lot of protocols and projects still believe in it and use it for security purposes, right? It's like the most secure. They're comfortable with the safes there. But ETH 10K, does it ever happen? Not sure. I would be more comfortable holding Bitcoin over the long run than ETH. Especially with these US ETFs, they don't even get any yield, right? So they can't, once they generate yield or once they stake it, then it becomes like a security. So there's no staking in these ETFs. It's like, seems like the whole point of ETH, right, is native yield, and you get access to the, decentralized computer.
Yeah, but I guess that don't people still, I mean, ultimately, longer term, yeah, that's an issue, like in terms of that will affect the demand for the ETFs or whatever, right? They don't have a yield. But if someone's allocating into ETH right now and they haven't had access to it because there wasn't an ETF for them to trade, if someone's allocating into ETH right now, it's because they think it's got exponential upside, right? It's not because it earns them 5% a year or whatever of yield, right? They can do that with US dollars in money market funds. So they're not really, just, I mean, there's not a marginal decision, the yield that it does or doesn't earn. The decision to it is the fact that it's like, it's got the potential to go sky high if you're a believer in it and you're a believer in the innovation and the growth of crypto in general. And ETH is a large part of that economy, I guess, right?
I'm sticking with Bitcoin here. I don't know. We'll come back in 10 years. We'll come back in 10 years, but it probably all goes up. But if you were to, put a yard of capital to work, where are you putting it? Just put it in there.
Yeah, I don't disagree with that. I don't think there's a reason to rush out and buy ETH now if you've got Bitcoin, because it's got the narrative attached to it, right? It's got the election. It should have a higher beta to the election, I think, right? The election outcome, if it is a more pro-crypto outcome, you would have thought it's the one that benefits. So, yeah, I don't disagree.
Well, I pick your brain a little bit about this. Okay, so we have cuts coming Wednesday. It's being priced in 60-70% that it's now 50 bips cut, right? You're more in tune with macro than me. But last week to a month was 25 bips, right? It's always going to be 25 bips. The Fed never really goes against their, against what they say. Now all of a sudden it's going to be 50, and as soon as it, majority becomes 50 bips cut, ETH just tanks 7%. Like, is there something in the data that I missed last week?
It is funny. It's like, you look at it and you're like, if I'm saying the reason why equities are rallying late last week is because of the increased probability of a 50 bip cut, then why the fuck is crypto selling off?
Yeah.
There definitely seems like a dichotomy there. I hear you, but I mean, my only explanation would be that, you know, there's forces in crypto that are just driving it lower, right? So that outside of the macro. So the macro story is developing positively. We have got rate cuts coming. We're getting arguably a bigger rate cut than we thought we were, and it's kind of being leaked by Wall Street Journal. And if the chances are he was told to write that article from somewhere, where it looks like.
Yeah.
So it looks like they realized, you know what, why the fuck are we waiting to do 50? Because we're so far, we're behind the curve now. Neutral rates are much lower. Inflation's printing on a 2 handle, and we've still got rates up at 5. Like, we got to do something, right? So I think they realized that and woke up to that. And equities like that fact. But the fact that crypto isn't moving on it suggests that there's just too much overhang of supply still. Whatever's keeping a lid on crypto right now is still there, pushing crypto down, right? And when that lid gets lifted,
It's us.
Yeah.
It's all the vol sellers.
Yeah, but when that lid gets lifted, I mean, you could get a big catch-up rally of, like, you know, a quick 20-30% in a matter of 1 to 2 weeks. But it's hard to really know when that lid is lifted, I think, right? So, but the price action is not nice. Clearly, if you're a bull and you're waiting, you're like, why is this thing not rallying on all the good macro news? You're like, okay, you're a bit concerned. You probably want to have some hedges. You want to have some hedges in place, I guess, right?
Sure. I heard the other side of the coin, that 50 bips is bearish because the Fed is realizing that they are really bad behind. The recession is coming. You know, there's the other side of the coin too, like that the 50 and then not emergency hiking, but them changing their stance this fast is not as good.
There is that argument, but then stocks should be selling off on that as well, and they're not, right? So that's the thing. Like the Russell ripped. Like, okay, maybe the S&P is just Mag 7 and no one cares. They're just going the way they want to go. But the Russell was up 2.5% on Friday because they started pricing in a higher probability of 50, right? And so it's like, if the Russell's not selling off, then why the hell is the Bitcoin selling off on that? It's not for the same reason, basically, right?
So somebody's still liquidating. I mean, ETH did like 7-8% down on a Sunday. It was like, or over the weekend. It's an insane move compared.
Yeah, I hear you. Okay, cool. Well, wrapping up, like, so what do you say? You're obviously bullish Bitcoin, saying it's basically going up forever against fiat, which I'm kind of fully on board with, right? Because they've crossed the Rubicon. But in your mind, what's the biggest opportunity out there now, right? What is the biggest opportunity to trade options right now in crypto?
Well, how do you come into this space now? You know, there's so much shit coins and meme coins around. How do you come into this? Oh, like, you know, you're going to self-teach yourself how to trade crypto. It's like probably not the right time. You know, the right time was 5 to 10 years ago. Now you're just flooded with all this, you know, nonsense garbage. Even the biggest exchanges are, you know, shoving Frog and mini Doge down your throat this morning. You're like, how is this even acceptable in this space, right? That's why people still laugh at us, right? Like, look, why are we still in this, you know, Bitcoin regime or, you know, time frame? It's like, well, because there's this cap on Bitcoin. Like, oh, Bitcoin goes to 100%. I mean, sure, I care, but does somebody with, you know, $1,000 care or $100? Do they care? No, right? I think that the trading crypto vol or learning crypto vol is really hard. There's a lot of, you know, good information out there for free. You don't necessarily need to pay for it. But in terms of that, you're going to come in and compete with us or compete with the biggest makers in the space, it's probably not the right approach. You're probably better off figuring out how to price options and figuring out where the curve is mispriced, something like this November 8th. And, you know, ride that wave and come in at these weird moments or, you know, a few moments every year where crypto vol's either pricing it wrong or, you know, it's just hasn't been there yet. You know, when you get those 150 handle days, you're like, just sell that every time, right? Like the next day it's going to 40. That's kind of the edge that I would look at now. I wouldn't try to come in and compete with the market makers or anything like that. You're better off sticking with these, you know, not one-off events, but, you know, few odd events every year.
And when you say the 8th of November is cheap for the election, I'm guessing what you're saying is maybe on the day the move is well priced, like 10% ballpark, but that day will then spark a bigger move in crypto markets over the coming weeks or whatever months. It's kind of like we'll open the door. Huh?
Yeah, say end of year, right? You have like a 2-month directional bias for December, a 1-month direction that you could ride that wave. Either you buy now and kind of, you know, ride that front end into the vol spike and then sell it before the election, or you come right after the election and find some sort of directional bias, either, you know, up or down.
Right. Yeah, fair enough. Yeah, exactly. Because the headline number doesn't look cheap when you look at the curve, but I kind of agree that it's like that will set the stage for the next leg in crypto, right? Particularly if that next leg is higher, because we've been waiting for that for so long that when that level finally breaks at 72, the whole world is going to be like, okay, let's get in now. This is it.
It's time. Yeah. 100K in December, say it with me or whatever, you know. Once the guy on CNBC starts coming out, you want to sell, right?
Yeah.
Once retail's back, and it's not a good sign. I went to dinner last night and the sushi chef was talking about blockchain and shit behind the counter, and I was like, oh man, dude, it maybe this is it. You know, it's moments like that where you look back and you're like, holy shit, that was it. That was like, you know, near the top.
Yeah. Which is why hedges are key, right? You know, people don't like wasting money on hedges, right? But ultimately, sometimes, sometimes, you know, you just got to accept a bleed in the portfolio to protect you from that unforeseen 50% crash that no one thought was going to happen actually ends up happening, right? So, you know, I'm always a big believer of having some hedges in the book. But
what do you do here if it goes to 30K and you're sitting long perps? You can't do that, you know. I don't think people even realize that. Like, you can't just sit there in a negative P&L for months and months. Like, what if we go to 30, 40K? You know, you always have to prepare for these, you know, outsized moves, either up or down. You can't just sit in these long perp plays for forever, right? Like, what if we come back to ETF price? What was it, 40, 45K before we go to 80? You know, and all you had to do was sit in the spot bag. A lot of these people don't have a spot bag, and that seems to be the, you know, I don't want to sound like an asshole, but you probably should get a job, and then you should probably build a spot bag, and then you should learn how to start trading crypto, right? It's going to be a rare opportunity that you know, make it now when Bitcoin's 60, and, you know, let's say if we go to 70 or 80 end of the year, like, that's not an outsized move, but for somebody who has a spot bag, you know, it definitely is.
Yeah. All right, bud. It's been a pleasure chatting to you properly for the first time. Obviously, Spaces wasn't quite as deep a conversation as this, but yeah, really appreciate you coming on and sharing your views with us all and the viewers. And hopefully I'll get you on again sometime.
Oh, yeah. Thanks, man. Appreciate it.
Take care.
Sure.
So what a cool avatar that guy had, huh?
Yeah. He's a good guy, Marty. He annoys me now and again. He sends me sort of photos of the beach in Brazil and
I know,
living the dream. Living the dream down there.
He showed me his views there. I was quite jealous.
Yeah, it's pretty cool. Yeah. But he's good. What I like about Marty, actually, I'll embarrass him now if he's watching, but he's very good at kind of drowning out the noise in these markets, and certainly like post 22. Obviously very like sell vol, and when people were getting really excited about why vol would pick up, he's always quite good at stepping back and going, well, what's changed? And so he has quite good sort of
said it very clearly, right? Vol is for selling.
Vol is for selling, yeah.
I mean, to be honest, I've always said like there's a bit of a gravity to vol, right? So when vol spikes, it's kind of a matter of when, not if it's going to come back down generally, right? So he's just obviously, his style is very much looking to fade those pops as quick as possible.
Although interesting, he thinks Vol was a bit cheap into the election.
The election vol, yeah.
So what do you make of that?
Well, I mean, obviously the curve is in a funny old state, right? It's very, very kinked at that point. And so there's about a 20 vol premium to the forward vol, which basically means the market is expecting an excess of, let's say, call it 10, 12% jump on the day, right? Which I think is probably about right. Yeah. I don't think it's going to do 20% on the day necessarily, right?
Yeah.
So, but then the thing about that is that if it opens the floodgates, if the result of the election then suddenly does open the floodgates, right? And people are like, okay, like we want to get in for the Q4 rally now that we've been waiting for and we've all been sitting on our hands, then yes, it could trigger a much bigger move in crypto. But I'm not sure that happens by the 8th of November. So arguably the 8th of November prices in a big move for the election already on the day. But maybe the value is in owning like call spreads or something to December, because that will be the catalyst and then it will take like a month or 6 weeks or whatever for the rally to then play out as all the money rushes in, right? So I don't know that I'd be buying that kinked part of the curve, but I do think given that the long end of the curve has found sellers and vol and call skew have been coming down, I do think owning some upside in December or March, either via calls or call spreads, is probably a better way to position for that Q4 rally. And maybe you sell some front end against it, right? Maybe you sell some October against it to like not bleed too much while you're waiting. And then if the market then dips, you can buy your Octobers back for next to nothing. And then you just be sitting there with your Decembers, right? Something like that.
Yeah. And he makes an interesting point as well. Like once we pass this election, we probably then clear to have a directional run either way. Obviously I'll have my view that, that would probably go higher, but yeah, so it's going to be interesting. And what about like how are you? Have you changed anything in the last week or so in terms of how you're positioned? Or
I had a few like bullish short-term tactical bets on to try and play whether if Trump did well in the debate. But after he didn't really do anything in the debate and we were sitting at like 5,800, I got rid of all of that and cleaned the book up. So I'm kind of sitting here with, I've got my crypto and I've got very little hedge on Ethereum and I've got a little bit of a hedge on Bitcoin right now to September, just because I think the September seasonality is pretty poor. I think stocks are getting close to a short-term top as well. I think you're going to see some de-risking across risk assets ahead of the election. So I don't want to be nakedly long for the next 6 weeks.
Yeah.
I want to be in a position that if we do get the seasonal dip in risk assets that I'm anticipating, then I want to be able to fill my boots with bullish structures for Q4.
Yeah. Interesting. This election for me is just really annoying because it just puts the question mark over everything. Like for me, I say the macro is so clear for me right now.
But I would argue it's actually quite a nice thing because what it's doing is it's giving you the opportunity to scoop up cheap stuff if your conviction is so high, right? You know, it's like, and it's even telling you like, well, yeah, the rally's not going to come until this stuff is out of the way, right? So I would argue if you've got the dry powder to be putting money to work and accumulating, rather than being annoyed by it, like actually you're being given the opportunities. I think the frustrated people are the ones who can't use the opportunity because they've already bought it too early, basically.
Yeah, and obviously within that, it creates like opportunities in itself, whether you want to be like short front end vol and stuff like that, and just play this range. Yeah, it just feels, we've just been waiting for this breakout for a long time, and we keep coming to the studio. I mean, we've kind of been in this 58, 62K range. We got a bit of an overshoot last week, but like, now we're back in that range again, and we just need things to kind of happen.
Or we can just keep selling gamma.
But I guess the annoying thing for me is that from a macro point of view, you go long periods of time where not much changes, and now I think we've got the Fed about to cut. I mean, we didn't really talk about China, but there's a lot of news reports out in China now. The PBOC are being put under some pressure, or at least they're leaking that a big bazooka could be coming from China. Finally, yeah. I think their former PBOC governor was out saying they need to take swift action to kind of stave off the deflationary threat that's there. So that could be coming. Fed cuts, global liquidity cycle picking up. I think we should really sort of be ramping, but yeah, the election maybe is the cloud over all of that. But I do feel markets, that's where we differ on this. I do feel the market's under position risk, and I think they could be forced ahead of the election, more so in equities than Bitcoin. But I think they could be forced into performance chasing if we start just to squeeze higher. You know, if you're particularly if you're benchmarked, you're going to have to go jump, have to up weight and have more exposure here, and that could be pain.
Yeah.
Pain is up. Pain is up.
The pain trade. All right, cool. We'll call it a day for this week. Super excited about who we've got on the show next week. We've got Trueflation coming in.
Yes.
So we would have seen what the Fed has done, and I'm sure he's going to have lots to say about it.
Yeah.
So
Some
looking
really
forward to that
interesting conversation.
episode, and we'll see you all back here next week. Cheers.